Good morning, afternoon, or evening, ladies and gentlemen, all in crypto here, and welcome back, guys, for another daily cryptocurrency market update. What a fantastic week it has been. The week we are looking at is this nice green candle here, and long may it continue. You guys will know that we've been drawing out this sort of Elliott wave structure that leads me to believe that we are now on that third wave. And we speculated the third wave is going to get you to around about 30K, so on and so forth. But things are looking good, ladies and gentlemen. So we're going to be looking at Bitcoin. We're going to be looking at Bitcoin against some of its other pairs. So not just the US dollar. We'll be looking at it against the likes of the S&P, which not only is it broken out from, it came back for that retest and is now looking for that continuation. Also doing rather well against gold. We're also going to be looking at really what's going on. So we've been covering this story since the start of the year. And with Silicon Valley Bank, we know what's happened. The Fed is essentially, and we'll go ahead and open up the Fed's assets, almost being forced somewhat to essentially spend in a time where they're trying to be restrictive. So when they spend, it's rather accommodating to the markets because it pushes liquidity into them. And when they restrict, of course, markets get damaged. And we know the whole story with Bitcoin. Bitcoin has gone down in accordance with all the other markets, with the Fed funds going up. 2-year yields is probably a better way to look at this. And now you've had a readjustment of that. Remember, the 2-year yields leads the Fed funds. So you are looking at the Fed funds, the interest rate coming down at some point, which actually could be pretty bad for markets and could tie in with the yield curve. People have stopped watching the yield curve. I do not know why. When this gets uninverted, you are in the danger zone of whatever crash it's predicting playing out. And this weekend, tomorrow, guys, I'm actually going to be doing a super long video telling everyone why it is I think the entire monetary system is about to change. The last 2022, we saw bonds go down in an order of an insane magnitude, and we saw the stock market do that. There are only a couple of incidents where this has happened, and actually 2 of those incidents, so we're talking maybe about 4 incidents including this one, 2 of those prior incidents, both 24 months after, led to changes in the monetary system, whether that be moving them from gold or whether that be fractional reserve, Bretton Woods, so on and so forth. And I think that is about to happen again. I think this is what this real steep yield curve is predicting. But I'll save that for tomorrow's video. We're also going to go over a couple of interesting things. Look ahead at the week ahead because people are quite euphoric. They're already counting their chickens. I think it's always good to be on the side of conservatism, even though we've been bullish since the start of the year. And we've been killing it, guys. I just want to share a couple of videos on my Patreon every single Sunday. And I also put out updates throughout the week. We cover the market. So Sunday, we really look to sort of get our allocation, or not allocation, get the kind of overview of markets and where we think they're going and keep everybody sort of level-headed. And, we put out weekly meetings, which you guys can see have been absolutely spot on. And we've also been giving a lot of this stuff away on the tube. We can see even during this period here where the markets were exceptionally bearish, everyone had flipped almost full-fledged bear, we were actually coming in and buying up the markets. And you also get a lot of my early release videos and so on and so forth. But that's enough of the selfless shilling, guys. If you want to join the Patreon, there's a link in the description. Honestly, for £30 a month, it is 100% worth it. So we're going to be looking at the week ahead. Fed is still set to do a 1/4 of a basis point rate hike, which you can now see markets are very much looking for. However, we'll see. We'll see what happens, guys, with that decision on Wednesday. So without further ado, guys, let's not waste any more time and let's get straight into it. So we know what's been happening with Bitcoin. We've been following it. We've been tracking it. And essentially, you are now, not only did you break out of this head and shoulders that we'd drawn, but this also correlates, guys. I just want to talk about, and many people, including people that I am, a mentee of, aren't fans of RSIs, okay? And I understand why, because they're a momentum-driven indicator. And when you have volatile things happen, it often skews the data presented. But there was a big warning sign back in here, this region here. And that was the fact that this move wasn't matching up with the RSI. This high was not supported by the RSI. And RSI is a momentum-based oscillator or indicator. And essentially it dictates, or what this is showing you is that there's a weakness in this trend. You know, it's vulnerable is how you want to look at it. In the same way that back down here, guys, we looked at the fact that you've got a bullish div here that I need to take serious as a technical analyzer. Because this is showing us that there's, even though we had the FTX spill, the momentum didn't back it up. And this was one of a few reasons. Remember, the 2-year yields was another one why we put money back in here and why we've been accumulating and are now in a very, very happy position. But essentially, we've been looking, and it wasn't just this, by the way, guys. You also had it on the S&P, bullish div. You also had it on, and this was another big one, USDT dominance. Oh, forgive me, guys. Remember this? Who else was drawing this, by the way? And you also had it on the dollar. That's a bearish div. And actually, before the yields even started to roll, we called out this and said this is very similar to 2018-19. And actually, there's a danger in this being very similar to 2018-19. And I want to talk about that in tomorrow's video because I do honestly think that something serious is going to kick off in the next 24 months. And I think it's going to be a whole upending of the monetary system that we currently use, and they're going to usher in a new one. Please stay tuned for that, guys. It might be one of the most important videos I've ever made. At the end of the day, this channel, more than anything, is here to help everyone. You know, I wish there was a channel like this back when I got into the markets in 2017, 2018, because it would have helped me out massively. And that's what this channel is all about, more so than anything else. So we know what we're expecting. You know, this head and shoulders target ultimately is giving us upsides, depending on whether you're logging it or you're non-logging it, of where we at? Sorry guys, my brain is just, it's been such a crazy, crazy week. Upside of roughly, if you take it off non-log, which is how I think you should do your targets, you know, 35k-ish. Yeah, and this is where I honestly think we're going. And this actually ties in with the kind of 3-wave structure that we're looking at. You know, I'm not an Elliott Wave trader. I think Elliott Wave on small time frames. Find me, and I'm still asking people to do this, a profitable short-term time frame Elliott Wave trader that will prove that with his P&L. We're also going to start publishing the trades that we take quarterly so that you guys can say, look, can this guy trade? Can he not trade? Because this is ultimately, you know, what I've chose to build my career in, and ultimately there's a lot to be proved. So this is what we're looking at. You know, I think, and we've always said this, you're going to fill in this inefficiency here very, very quickly, which is what you're looking to do. You could use something like volume by price to show you just how much volume was traded there. You don't really need to, if I'm being quite honest, because you can actually see it just in the price, right? Look at how weak the volume is during this area. You can see that in the price. You don't really need to use a volume by price for that. But this is all what we're looking at. And the opportunity here is take a look at your altcoins. We did DOT for you. There's going to be some serious money to be made. We actually shared one of our altcoins with you yesterday that I think is 300% plus up at the moment, all given on the Patreon. Go and check all that out, guys. You'll get links to all my altcoins, all the early videos that I release, interviews, so on and so forth. We've got some really important updates on there. But we know why markets are doing what they're doing. We've seen this kind of, it's kind of a pivot-ish with the Fed, with them upping their balance sheet. Remember, we are in a dangerous place here with what's going on across the board, you know. Oops, bank rush to borrow, record-breaking 150 billion from Fed's discount window this week, topping even a record during the 2008 financial crisis after the collapse of Silicon Valley Bank. Isn't it interesting also how Bitcoin was created in this kind of an environment? But we're not going to look too much into that. I do think there's somewhat, I'm always a bit unsure about Bitcoin's origins, and I think there potentially is, you know, I don't know. To be honest, I don't really want to make too much comment on that. But I'm going to start doing some videos where it's just me and the camera, where I just share thoughts on certain interesting topics that we can debate, maybe as a community. But let's look ahead to the week forward. So Fed poised to approve quarter-point rate hike next week despite market turmoil. So they still have to fight inflation. The problem is now is, and we've always said this is the choice, inflation or an imploding of the economy. What would you choose? Now, in my opinion, if I was the Fed, I probably wouldn't have even, if I, understanding the system as well as I think I do, you can't have high interest rates in this sort of a system because it's inflationary inherently. And when you stop allowing it to inflate, you have Silicon Valley Bank and all this sort of stuff. So I probably wouldn't have even, I don't know, raised rates. I'd maybe have let inflation come down on its own, even though it had been damaging for a period and done things to sort of soothe that. But looking ahead, moving forwards, you can see that markets are pricing in 25. The yield market certainly isn't. But you can see we've got nothing on Monday. We've got quite a lot going on. We've got Canadian CPI, we've got UK CPI, we've got the FOMC rate decision on Wednesday, Bank of England rate decision on Thursday, Japanese CPI, which will be an interesting one, Eurozone PMI. You know, we've got a lot of data still coming in. It's all going to still move markets. It's very easy because we're doing what we're doing to sort of take your eye off what's actually taking place. Do not do that because you'll get caught short when it, you know, when something does happen. But Bitcoin's looking very, very positive. All stuff we've drawn previously. Bitcoin against the SPY was a big one for us. You know, you can see you had this sort of pivot and then you're off. Bitcoin against gold, it's doing very well. And remember, stock market had a bad day closing on Friday, and I think this has a lot to do with there being sort of companies that tied in with a lot of these banks and stuff like that. Whereas this Bitcoin's what was made for this. It's outside of that system somewhat. And actually look here at Grayscale GBTC, which we said, or actually the market sniper, Francis Hunt had given this as a lead indicator. You know, overlay your charts. You can see actually GBTC has got Bitcoin's price already back at this sort of 30k range. It's heading there, guys. You have gapped here. Maybe you come and close it. It's very, very common that you'll close a gap. So this is where we're heading, guys. We're very much set on that. You know, we think there's a window of opportunity. Ultimately, I do see pain coming down the line. I think there's lots of warning signs. But whilst the window of opportunity is here, we're going to take it. I think one of the worst positions, scared money don't make money. I think one of the worst positions you can have is no position. And actually, there's been a massive, massive influx of people into the community that are or were with other communities that have just, you know, completely missed any opportunities over the past, you know, if you're an investor and a trader, you can't just do nothing for a year if this is how you make your money. And ultimately, you know, we got out of the market last year. We shorted things like Luna before it even unfolded, took a position back in and are really looking to ride that to the upside. And you know, even though we've got things largely right, I want to say this right now, we will 100% get things wrong. I've been in this game for long enough to realize that and be humbled in front of the markets many, many times. And if you have been caught on that bear side and you're still on it now, reallocate it or take another look at the market and maybe take a second guess. Don't just anchor down on a belief that you've been proven to be wrong on thus far. And eventually, I want to say this about the bulls as well, guys. I'm seeing Twitter. Oh my goodness, it's one of the most. I'm really just on there for a laugh more than anything to see what these guys are putting. So emotional, bunch of emotional adults that are trying to be traders. When they make money off Twitter and advertisement, then they do actually trading. I've never seen a P&L from one of these big accounts. Everyone's just full of BS on there, guys. But I'm seeing a lot of the sort of more bullish people that have only really flipped bullish after the move claim victory and say, how is this not a bottom? Well, even though we took a stab at this being a bottom, we don't know that it is the bottom. You could have something that could take you to a new low. You know, and they already ruled that out. You can't rule that out in this kind of an environment. Right now, things look good and we're suggesting upside, but something could change. And this is why you need to be an active investor. Even better, this is why you need to get into a community that will give you regular updates to help you guys navigate the emotional side of these markets. And if you don't like it, you can always cancel your membership after a month. That is all I've got for you in this video, guys. So key takeaways is watch out for data next week. Watch out for the rate decision. You've got, you know, the main market for me to watch is the 2-year yields. Also look at the dollar. Bitcoin's had a fantastic run. Look for points where it may rest. In fact, for that, we're going to get on our fib. Look at where you're coming up to. And you're breaking out. Same way in a retracement. You look for your fib levels. Just like we did actually coming down here. And this actually, the fib levels actually allowed us to buy. We bought down here when nobody else would. look for this to the upside. Look for these levels for rest periods. I think you've got a very good chance of getting to the 0.382, which puts you at 35-ish K. That could be a third wave in. And I think altcoins at this point would have done spectacularly, and hopefully you guys should have all made a little bit of money. So that's all I've got for you in this video, guys. If you've enjoyed the content, like us, I'd appreciate it. So as a comment, and I'll catch you all in the next one. Thanks all for watching, and stay tuned for my video tomorrow where we talk about the crash that is coming, because it's going to be an important one.